Hi everyone, and welcome to my video blog. Today, I'm going to be talking about mutual funds. Mutual funds are a type of investment that allows you to pool your money together with other investors and invest in a variety of securities, such as stocks, bonds, and money market instruments. This can be a great way to diversify your investment portfolio and reduce your risk. What are mutual funds? A mutual fund is a type of investment company that pools money from many investors and invests it in a variety of securities. Mutual funds are typically managed by professional investment managers who use their expertise to choose the securities that are included in the fund's portfolio. How do mutual funds work? When you invest in a mutual fund, you are essentially buying shares of the fund. The price of a mutual fund share is determined by the value of the underlying securities in the fund's portfolio. The value of the fund's portfolio can go up or down, which will also affect the price of the fund's shares. Types of mutual fund. There are many different types of mutual funds, each with its own investment objective. Some of the most common types of mutual funds include stock funds. These funds invest in stocks, which are shares of ownership in a company. Stock funds can be either actively managed or passively managed. Actively managed funds have a manager who makes decisions about which stocks to buy and sell. Passively managed funds track a specific index, such as the S&P 500. Bond funds. These funds invest in bonds, which are loans that are made to companies or governments. Bond funds can be either actively managed or passively managed. Actively managed bond funds have a manager who makes decisions about which bonds to buy and sell. Passively managed bond funds track a specific index, such as the Barclays Aggregate Bond Index. Money market funds. These funds invest in short-term debt securities, such as treasury bills and commercial paper. Money market funds are considered to be low-risk investments. How to choose a mutual fund? There are many factors to consider when choosing a mutual fund. Some of the most important factors include your investment objective. What are you hoping to achieve with your investment? Are you looking to grow your money over the long term, or are you looking for a more conservative investment? Your risk tolerance. How much risk are you comfortable taking with your investment? Mutual funds can vary in risk, so it's important to choose a fund that is appropriate for your risk tolerance. Your time horizon. How long do you plan to invest your money? Mutual funds can be invested for short-term or long-term goals. Your fees. Mutual funds charge fees, so it's important to compare the fees of different funds before you invest. How to buy and sell mutual funds? You can buy and sell mutual funds through a brokerage firm. When you buy a mutual fund, you will be buying shares of the fund. The price of a mutual fund share is determined by the value of the underlying securities in the fund's portfolio. You can sell your mutual fund shares at any time. However, if you sell your shares when the market is down, you may lose money. Conclusion. Mutual funds can be a great way to invest your money. They offer diversification, professional management, and liquidity. However, it's important to do your research and choose a fund that is appropriate for your investment objective, risk tolerance, time horizon, and fees.